All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Apple reported earnings after the bell yesterday. You can see stock is down about $14, about 6% here. And, basically they had the same story that the market's been worried about and that we saw out of Amazon, where basically, record numbers. I mean, great numbers. Fantastic record numbers. Concerns that growth going forward is slowing. Still growing, but growing at a slightly slower pace. Now, 2 years ago, equity markets would have killed to have growth at the pace that they have now. But, it's a second derivative world out there, and that fear, permeates, and we see that here with Apple. And so it got sold initially and, has pretty much been sold since. If you look at the numbers and you just put them in a little bit of a visual context, it's an interesting number. You come down here to earnings per share, slight beat here. But you look at what next quarters are going to be. It's going to be a monster beat over the last while. And, you look at revenues, they continue to grow quarter over quarter, and they're expected to continue to have a record quarter here, this next quarter. But, falling off a little bit in terms of the growth element that, the market is expecting. It's one of those where I think the argument can easily be made that the market has taken it too far to where they're selling this concept a little too far. But at the same time, those that are selling will be dead right if this concept continues. They'll be dead wrong if there's some sort of trade war resolution and we start to see companies revise some of their growth rates up. But a lot of the reason why some of these growth rates have been revised down a little bit is simply because of the trade war. They've kind of used that opportunity. And so it's one of those where as I go through earnings reports and as I kind of read earnings reports here this season, it really feels like CEOs are setting things up for a really nice beat next quarter. And we don't see that typically, but it almost feels like CEOs are doing that this quarter and using the trade war as the excuse, as the reason that they're lowering guidance going forward. But it does feel like that game of, all right, we'll lower and then we'll beat next quarter and we will look like geniuses. And I think that's a part of what's going on. It's not going on everywhere with everything, right? I don't think Caterpillar played that game. I don't think I don't think other companies played that game, but I do think we're seeing that game being played here with some of these techs. And, we'll see how it plays out. But overall, Apple down. It doesn't change Apple for me in terms of my willingness to play this for the challenge. And I mentioned it yesterday as I looked at the challenge watch list. I'm willing to be a buyer of Apple. I'm willing to be a seller of Apple with the right signal. And, it's one where earnings report. It's not like I'm going to read much of a signal into an earnings report. But it is something where, am I going to get a signal today? Probably not. Probably not here with that. So Apple, for me, very, very neutral, in terms of my bias, in terms of my expectations with it after this earnings report. I understand the Bears argument. I understand where they come from. I also understand that Apple is absolute mint in terms of printing money. And, if we don't see the economy fall off a cliff, Apple will perform very, very well. Overall, I thought the most interesting earnings was ExxonMobil. Not to say, hey, let's go buy ExxonMobil, but it was interesting. Exxon turned bullish on Katie, had a Katie signal 3 days ago ahead of the earnings. It was just something where the options, just ahead of earnings with earnings risk and the options. I wasn't going to do that. But, we see Exxon gapping up here on earnings. If you look at Exxon's long-term chart, This has been a stock that, we've talked about. It's been stuck in consolidation for years now. Years. And, one that sure shows some signs of wanting to break out, wanting to, push on higher. But I think the most interesting thing from their earnings report had nothing to do with really Exxon itself, and yeah, it's a positive for Exxon, but they talked about production upticks in the Permian Basin that were going on. And there's been an area where stocks that have heavy exposure to the Permian Basin, they have been hit, and they've been hit very hard. My favorite stock in that area is Concho Resources, CXO. And they have, quite a bit of Permian Basin exposure. And, when you hear Exxon talking about production upticks in the region, makes you take a look at a stock like Concho and go, okay. We're going to get a really nice trade opportunity on this going forward. I know it's bounced here this week. It's up about $10 here this week. But, this is one of those where are we going to start to see some money shift into a sector over the course of the next 3 to 4 months? And I think the Exxon report suggests that there's a pretty good chance that we see it. Some of the other names in this space are Encana. ECA, not my favorite name out there. I think they have some serious issues overall. We saw a big gap down in them here this morning. I do want to go through this report. I haven't been able to go through it yet, but it's never been one of my favorite. But there's a little known stock, Callan, that also has exposure there in the Permian Basin, and this is one that has sold off with the price of oil. I like Concho better, fundamentally and as a company, but you take a look at CPE here, you even take a look at this week's candle and what that's doing. This may be setting up for a really nice move up into that $15, $16 area going forward with some of those production upticks. Some other names in that space, PAA, Plains All American Pipeline. This is kind of a little more conservative type of a way to play it. Kinder Morgan, another kind of more conservative way to play it. But I do think the big takeaway from Exxon's earnings is, hey, keep it on that Permian Basin, because there's some improvements that are happening. And when we talk about growth at an accelerated rate or decelerated rate, right, one of the big concerns about the Permian Basin is it's been growing at a slower rate. Hearing talk that they might be growing at a faster rate here going forward, that's going to be very attractive for investor money, and something that I would not be surprised to see money flow in to a strong degree. If you take a look at something like Kinder Morgan, it's a little more conservative. Why? Well, they have about a 4.5% dividend. Right, so they have a pretty hefty dividend associated with them, and it's one of the reasons why you don't see it, make some of the swings that you see in something like a CPE or Callan there overall. Other stocks, Oasis also has some exposure there. OAS Petroleum, not one that I follow all that much, but interesting volume uptick here in the last couple days. So one of the areas that I say that I look and I go, okay, earnings season so far, okay, there's this, that, and the other. But as far as suggesting what's going to happen over the next 3-4 months, I think we can read a lot into that Exxon report. Last one in that group, Diamondback Energy, FANG. They have some exposure there, but again, not one of my favorites, but yeah, definitely choppy through this 110, 140 range, and we're right down here at the lower end, so it's got to go back up to 140, right? But anyway, a lot of consolidation in the stocks in this space. You'll notice the Permian Basin stocks, they've had this, year-long consolidation, and to hear this kind of out of Exxon, right? So anyway, that's kind of some of my takeaway on some of the earnings that have come out here. Last one is Alibaba, and I haven't gone through it all yet here with Alibaba. But Alibaba kind of has another crosswind going with it here today, in the fact that China and the U.S. trade war news, and how's that going to affect things? And I put the link in the morning notes here this morning, but Bloomberg reported last night that the U.S. President Trump, after a phone call with the Chinese premier, asked his cabinet to draw up a trade deal, and that there could be some life there. Others speculate that it's a political ploy ahead of the election, midterm elections here in the U.S., and that ultimately it'll fall apart. President Trump will blame China, and the saga continues, right? I mean, it is an absolute soap opera, and will continue to be. And we don't see the market really pricing in that the trade war is over. Today, yes, there is a bounce in the market that is absolutely due to the trade war and some of that trade war speculation. But we're not talking about a big move, right? I mean, we're not talking about a hefty move here overall. Now, for me, for the challenge, I have Adobe, which, yesterday lagged and this morning lagging a little bit, but still holding on to this gap. When I look at Adobe kind of by itself, right, and I look at it and say, okay, this is actually a really, really nice hold right here, really good setup that suggests we should see some upside. In fact, it may be after, a gap down in type of, bullish engulfing rally. And I do expect that we will see that. If I look at it in terms of, how's it performing relative to the market, to the sector, well, it depends on how many days back I'm comparing it to. If I compare it to 14 days, it looks really good. If I compare it to 3 days, it doesn't look all that good, right? It's one of those where it's kind of been lagging a little bit in the last 2 days. Don't really want to see that, but at the same time, I'm going to hold my position here and go forward. It's not stopping me from making another trade. What's stopping me from making another trade is I'm picky in terms of I want to see a higher low come in. And, that pickiness kind of, you can say, cost me with Chipotle in the short run, right? I said, you know what, I want to wait for a little bit of a higher low to come in, a little bit of sell. It's rallied $20, right? I've missed out because of being picky there. Boeing yesterday triggered bullish on Katie. I decided I'll wait for a pullback. I want to see some higher lows come into these. And if I'm going to get aggressive, that's what I want to see. You already see what's going to happen to options when the stock is flat. Just take a look at Adobe yesterday. Option was down almost 20% with the stock flat, right? Option values are going to compress in a big way with an overall flat type of move for a stock, and something that something that does add risk there. But at the same time, if I have the nice enough setup, I'm definitely willing to go for it. And there are plenty of stocks out there that I look at and I say, hey, the moves they made this week, these are types of moves that typically will see another round of big buying pressure come in after a higher low. But it's also one of those where they're quite a bit of ways from the 7, and to see that come in the short term is just a little bit higher, higher probability overall. CAT being helped here this morning with the China news. Okay, could it go straight up from here? It sure could. But what are the odds? What do they favor after a bounce like this? They favor at least a little consolidation, a little bit of pullback in the short run, and that ultimately is where I think the buy opportunity, will be, for a lot of these names that are on my watch list. Now, something like a Visa, a little bit of a different chart, but I already have this chart with Adobe essentially, right? It's kind of the same chart there. Pepsi. Breaking down below the 7-day moving average. This is one I'm eyeing for puts, and I really like the setup. And I might be in some Pepsi puts before the close of the market today using 112 as that stop area. I want to see kind of how it plays out a little bit more, but it is, my favorite setup on the board right now in terms of Pepsi puts. And we'll be looking at that into the close today. Some of the energy names I find to be interesting. ConocoPhillips, which, came down to the 200-day moving average, snapped on back a little bit. It's kind of holding in here where it sits. They've already had their earnings. It's not like I have to worry about that. That's not in the options anymore. So interesting upside setup there. Mentioned Hal this morning that I'd be watching this for an entry. I did not get a signal for me to want to chase here with it, with Hal. I wanted to see something a little bit stronger, but it's getting there. It's getting there. If it closes above 35 today, that could be interesting. But I'd much rather hold Adobe calls and Pepsi puts than Adobe calls and Halliburton calls. I do worry a little bit with Halliburton that this is just a little bit of flag pattern here before one more dip before that becomes really a fantastic buy here overall. So those are some of the things that I'm looking at. When I look at some of the banks and how they're trading here today, another little blip up, but at the same time, I want that higher low, to go and to chase into them. It is just historically, it is more common than not to get a reversal on Jobs Friday. And with the gap up here, even though the gap up had nothing to do with jobs, right? It had everything to do with China. In fact, the market has pretty much just gone down since the jobs report. Really, this is something where market has a strong history of reversing on the jobs report, meaning if it gaps up, it drops, and if it gaps down, it pops that day. We haven't seen that play out over the last couple of years, but we did see it last month in a strong way. I would not be surprised to see that, going into the weekend, looking at how stocks are trading, where a lot of these are. I just wouldn't be surprised to see that little bit of pullback there. So, I'm bullish enough to hold Adobe. I'm not bullish enough to go and test my luck here on a Bank of America. But we see Bank of America fall on back Monday, Tuesday. Yeah, absolutely. And there could be some, that maybe set up that way a little bit sooner. But it's probably going to be a day two for an FCX at CAT, Bank of America. So, my favorite setup this morning, Pepsi on the downside. And, hopefully it'll hold about right here. I do think if the market sells off, we'll probably see Pepsi hold in at least today. But it sets up for a real nice risk-reward scenario on this move below the 7-day moving average, using kind of 112 as an easy stop, and the options are pretty decent. They're not in the ridiculous stage like so many other things that are out there. So anyway, those are some of the things I'm looking at this morning, some of the things going on out there in the market, here this morning. A lot more earnings still to come, but I think most of the earnings stories have been pretty much told, and have been pretty much set there. We have heard, one last thing I wanted to comment on. We have heard a lot of data here out of Adobe on what the holiday season's going to be like. Adobe does a lot of big data mining and crunching for all of that every year. And interesting to see that after the numbers yesterday, XLY was the big outperformer here on the open this morning. Now, they're giving up some of their gains. They're a little bit oversold, but or overbought. But, even though, yes, Apple may not be making as much money as the market expects during this holiday season because, well, most of us with Apple products don't need to replace them, it does free up money for other things and other shopping and other stocks, and we're seeing some money flows come into the Walmarts and the Targets of the world here this morning, the Macy's of the world, really nice move, 4% up, and we're seeing that money flow here. So this isn't Apple's earnings are going to drop a little bit or not going to grow as much as expected this earnings or this, holiday season. This isn't the market pricing in a negative holiday season or a, bearish holiday season. This is the market going, okay, you know what, fine. Amazon, Apple, people aren't going to spend as much money there as they have years past. Well, they'll actually spend more, but it's not going to grow at the same rate. Where are they going to spend their money at? And, Macy's, Best Buy, Bed Bath & Beyond, which is has been a train wreck, but you see this here this week, a really, really high percentage bounce here in Bed Bath & Beyond here this week. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.